Sanjeev, this question is coming your way. From your perspective, how exactly do you see the, this entire CAG report will move, and what is your house call when it comes to private utilities?
Okay, as far as the CAG report is concerned, I think one thing is pretty clear that going forward, coal blocks are going to be auctioned, and I think this is an extension of what you will see what's going to happen in India as far as allocation of natural resources are concerned. All natural resources in the future are only going to be allocated through an auction process, an open, transparent process where the rules of the game are pretty well laid out. You have already seen that happening in telecom spectrum. I think the same will happen in case of any metal ores or coal blocks for that matter. As far as the specific impact of the CAG report on coal issue is concerned, I would suspect there could be some amount of reallocation of the blocks where we haven't seen any production starting. Also, in cases where companies have already started production, I won't be very surprised if there is some sort of additional tax or royalty which is imposed on the coal being produced in those blocks. That could be either something which the government decides on its own, or it could be linked to whatever price discovered post an auction process whenever that gets complete. So whichever way you're looking at it, clearly the returns of investment in this sector is going to decline even for companies which have started production from the coal blocks. As far as the private sector power companies are concerned, barring Tata Power, we really don't have a positive view on any other stocks over there. Tata Power is more of a valuation angle. We have a fair value of about 110 rupees, and that is after ascribing a negative value to the Mundra Power project. If there is some positive resolution on the PP of the Mundra project, you could add another 25 rupees to the fair value. So that's the only one which you're positive on. Rest of them have too many issues associated with either the supply of coal or unfavorable PPAs. So as of now, we are staying clear of all the other names.
Out of the mid-cap pocket, watch out for what InSwift Labs is currently doing, because it's a double-digit gain coming in this morning for the stock price. InSwift is currently notching a good 13.5% now in trade. 58.20 is where the stock is currently. But Sanjeev, just want to get back to you on what's happening in the commodity universe. With crude oil prices jumping again, do you see the government biting the fuel price bullet? I mean, how do the OMC stocks look in this regard? And also with crude surging, should one buy Care in India, hoping for higher realizations?
See, as far as the OMCs are concerned, the key issue is when the government will be in a position to raise prices. Without that, there is really no case for these companies. Then they are totally dependent on how much compensation the government eventually gives and how much money comes from the upstream companies. So there is a huge amount of earnings uncertainty over there. If you look at our numbers, we have assumed a price increase on September 15th, 4 rupees per litre increase on diesel, 50 rupees per cylinder on LPG, about 2 rupees per litre on kerosene. And even assuming that, we are looking at a subsidy burden of somewhere about 1.3 trillion rupees. That is assuming oil at 25. If we don't have a fuel price increase and say oil is at 110 average for the year, then we are looking at a subsidy burden which is about 1.7 trillion rupees. That's about 30,000 crores higher than what we saw for 2012. Now, where this money is going to come from is anybody's guess. I guess upstream companies can bear about 1/3 to 35%, not more than that. So the balance has to effectively come from the government. The downstream companies are in, somewhat weak position this year because of high inventory losses, high foreign exchange losses. So they won't be able to take any of the subsidy amount. So the bulk of it has to come from the government, which means that the fiscal position is going to get strained even more. So I don't think we really have any option but to raise prices. But having said that, we have delayed it for so long, it could not happen for some more time. Who knows the political situation out there. As far as cane is concerned, we like the stock at current levels, but having said that, this is getting now fairly valued. A fair value is 360 rupees per share. And I think over the next few months, you have to get some demonstration of how Cane India is going to increase production from, say, 175,000 barrels per day currently to 300,000 barrels per day, which the company has been talking about, and how the reserve numbers will increase over a period of time. Both those things will probably go hand in hand. So, given weak rupee and high crude prices, it looks, fine, but we would wait and see how these two issues get resolved, both on the reserve side and on the increase in production.
Let's look at how the private banks have moved this year. And this year, Kotak Mahindra Bank is up 33%. That makes it the best performing private banking stock on the Nifty, followed by HDFC Bank and Axis Bank and ICICI Bank. This year, they've been marked underperformers. In fact, they are now underperforming the index. Sanjeev, I won't ask you to comment on Kotak Mahindra Bank. I know your view on HDFC Bank, but my question is on Axis Bank and ICICI Bank. Why are they underperforming the index at a time when the world is fixated with buying private sector banks?
I guess there's a difference in the book over there. Both HDFC Bank and Kotak Bank have a book which is more oriented towards retail. And as far as retail loan book is concerned, we're not seeing any problems over there. That's the feedback we get from both HDFC, IndusInd as also Kotak Bank. But clearly people are concerned about exposure of both Axis and ICICI Bank to the infrastructure companies, and both of them have books which are pretty similar to an average PSU bank is concerned as far as loans to the corporate sector is concerned. So obviously there is naturally a concern that if the PSU banks have had so much amount of restructured loans and NPLs, is it safe to assume that you won't see a similar situation in Axis and ICICI Bank? Of late, we have been hearing that you are starting to see first signs of restructuring in some of the loans of Axis Bank. ICICI Bank still seems to be okay for the time being.
Sanjeev Prasad, really appreciate your time and thank you for your good and solid insights as always.